But does a rate cut really change the narrative in the tech trade, or is this just an overreaction? Joining me now is Ken Gawrelski, senior internet analyst at Wells Fargo. Ken, it's great to have you on. We'll start right there. What does a rate cut do for tech?
Yeah, so thank you so much for having me on. So it's an interesting place. We had a really strong second quarter with advertising. You take us back, right? April, we were staring down the barrel of tariffs and a lot of fear. And then what we had was a very strong second quarter in advertising and e-commerce, well above expectations. And then a nice early start to the third quarter. The fear was that the consumer would run out of gas in the back half, and that there would be more weakness. I think this rate cut or indications that there will be rate cuts are suggestive of maybe a healthier consumer and give investors more confidence about the back half revenue trajectory.
So looking at your coverage universe, are there certain names that you'd be buying in anticipation of this right now?
Yeah, I think look, the more cyclical names certainly are here to benefit, right? Meta continues to be one of our favorite stocks. Again, it's really, they've laid out for us an OPEX and CAPEX heavy investment period, but we need revenue on the other side from that, right? And so this gives us some greater confidence in the health of the overall consumer in the back half and really looking into 26. Another name that we've been maybe less positive, but more certainly is a tactical winner on this is Amazon, right? The big retail business, they're a big retail business. They announced recently an entry into a more aggressive entry with Prime same-day delivery into grocery. So that's a name we also see in the back half into 26 that would benefit from this trend.
I mean, part of what spooked investors to start the week, and I think triggered some of the selling and profit-taking we saw in tech, were the comments that we got from Sam Altman about an AI bubble, and also this MIT report as well about the return on investment and maybe the lack thereof for much of the money that's going into this right now. So it raises the question, can AI actually generate outsized free cash flow? What is it going to take for us to see that? And is that really what the AI trade longer term hinges on?
Yeah, so it's an excellent point. And most of the dollars, the AI dollars thus far, have been in the infrastructure side, right? The chips and cloud service providers. What we're really looking for is that next leg, which is the application side. ChatGPT, OpenAI's ChatGPT is one of them. It has massive consumer adoption. So we are definitely seeing signs here of consumer adoption of AI, and enterprise adoption on the application side. But that's really what we're looking for in the next leg. You do have a push that you talked about earlier on the last segment about Apple considering Gemini for its AI efforts. There's absolutely an opportunity there. And Google's in an interesting place because it's got a legacy search business, a great business of the last generation, which is due to consumer behavior changes, is going to be forced to adapt. And that's going to be an interesting case as we over the next 12 months. And one thing you know that wasn't mentioned there was we have this search monopoly case that we're waiting for a remedy. We've been waiting every day between 4 and 5 p.m. after the market closed for a decision. Maybe it's today, but we think that will be really a very important milestone for Google and its search efforts.